Hi everyone, welcome to the September edition of Vortexa MENA Insights. You're joined by myself, Maroo, and in this session, we're going to go through some of the most interesting things we've been seeing related to the Middle East and North Africa region. So in this session, we're going to cover a few things, namely the latest with OPEC plus crude supply, some updates on Iran, global heavy sour crude dynamics, with a particular focus on what's happening with the Americas and their impact on the Asia markets. And then finally, we're going to round up with some information on Middle East diesel exports and the impact that's having on freight markets. So without further ado, let's get into it. So obviously, OPEC has been the talk of the town in recent weeks. We've heard the decision for OPEC to delay the unwinding of its production cuts to December. And here, what we really wanted to do is illustrate the difficulties or the challenges for the group in achieving production cuts, especially when there's a divergence between particular members of the group. So here we've got on the left-hand side chart the seaborne exports of Iraq, Russia, and Kazakhstan combined. And on the right-hand side chart, we've got the same exports for crude and condensate exports for Saudi Arabia. And what you notice here is starting off with what's happening with Saudi Arabia. Saudi Arabia has been doing a lot of heavy lifting in terms of keeping its production pared back. And as a result, its exports are much lower than they have been in the previous year and much lower compared to seasonal averages. And that's made clear with how low that red line is relative to the range in the chart. Now, if you turn your attention to the left-hand side, you can see a very different picture with combined exports from Iraq, Russia, and Kazakhstan. And there you can see, even with officially production cuts in place amongst the OPEC plus group, including these three countries, we can actually see their total crude exports have been very, very similar to year-on-year levels and very, very similar to historical levels. Now, there are compensation plans which have been agreed and have been since revised. But on latest reading, it doesn't really seem like much has been done, at least in August so far, for any kind of real change in exports and therefore an implied change in production cuts. If we move on, we can see what's happened with our onshore storage data. And so what we see is with this approach to really keep production down, in order to maximize revenues, what we've seen is an unwinding in storage volumes held, especially within tanks located within OPEC members. And that's led to a really sharp draw of onshore inventories at OPEC plus nations. So in this right-hand side chart, we can see this red line well towards the bottom of historical ranges and staying at the bottom of historical ranges. And what this really means is that even with OPEC production, OPEC plus production adhering to cuts and staying low, we can see exports have still remained supported by a drawdown in inventories. Now, on the left-hand side chart, we can see in comparison what's happening with OECD nations. And there we can see also a drawdown in inventories as well, but to a much lesser extent and only in recent months, rather than compared to the start of the year where actually inventory levels were creeping up towards historical norms. Now, what that means overall is that when we combine crude oil held in onshore inventories and held across oil tankers worldwide, supply levels are actually pretty normal. And we can see this on this left-hand side chart where we look at where this red line is in relation to historical norms. And we can see that actually we're not too far from where we were last year, and we're not too far from the historical average across 2019 to 2023. Now, while the total volume may not be too different from the past, the breakup of how that volume is being achieved is quite different. And that's what this right-hand side chart shows, where really you can see when it comes to seaborne supplies, where is the cut in supply coming from and where is the build in supply coming from? And here what's most obvious is actually on the right-hand side chart, this this pink section, which is crossing into the negative territory. And that's really a sharp reduction in Middle East Gulf crude and condensate exports versus a couple of years ago. And that's remained the case since. In comparison, where we look at other exports from other locations, such as non-OPEC producers in the Gulf of Mexico, South America, and to an extent Canada West Coast as well, we can actually see a pickup from where we were a couple of years ago. Now let's move on to what's happening with Iran. And in order to give an update, I think it's really important to look at what's happening both with exports, but also what's happening with floating storage. And here on the left-hand side chart, what we can see is that overall exports for Iranian crude remain still very, very high in August, close to the 1.5 million barrel a day mark. Yes, it's slightly off from June and July levels, but still very high on a historical basis. And once again, that's achieved by a combination of drawdown in inventories, which we've seen for many years now, but also a slight build in floating storage as well. So in August, we see a little bit of an uptick in Iranian crude and condensate held in floating storage. And that's because some of the shift from onshore storage into floating storage offshore. Now, what this means is Iranian supply for China is plentiful, and little is it surprised that China is actually importing more and more Iranian oil as this happens. So what we can see here on this left-hand side chart is China's imports of Iranian crude and also fuel oil combined. And we can see that's picked up in August, especially from what seemed to be initially a declining trend. And we can see a lot more, especially heading towards Shandong and Jiangsu. So those are the independent refiners, which are most price sensitive. And if we focus on these East China refiners, specifically within Shandong and Jiangsu, we can see that, yes, they are the main buyers of barrels from Iran, Venezuela, and Russia. But actually, most of the increase that we've seen is actually from Iran. So if we look at what these buyers are doing with relation to Venezuela and Russia, they've actually been pretty stable since. Now let's move on to talk about what's happening with heavy sour crude, and especially what's happening with the Americas markets, because we see some interesting trends happening here. If we look at what's happening with the total Americas crude imports, so that's a combination of North, Central, and South America, we can see in August on this left-hand side chart, heavy crude is really making up more and more of the total crude slate in the Americas region. We can see actually heavy crude is almost matching what the imports are for medium crudes, and that's been picking up actually since May, June. Now, if we look at where that extra crude heading into the Americas region is coming from, on this right-hand side chart, we can see three countries being key contributors of growth. So we can see more crude coming from Ecuador, Venezuela especially, but also more from Canada as well. So these heavy sour crudes are really feeding into this Americas region, and that's somewhat limiting supply for Asia, which would typically be also a buyer of Ecuadorian and Venezuelan crude. Now, if you look very closely, you can actually see on the right side chart for Canada, there is a slight decline there for the month of August, and that fits quite nicely into this next slide. So what's happened in August especially is that more and more crude from Canada, heavy sour crude from Canada, is actually heading towards Asia. And that's been facilitated somewhat by the startup of the TMX pipeline. And within this, we can also see more and more, rather than shipments heading via STS, more and more shipments are heading directly. So if we look at this left-hand side chart, we can see the emergence of sections in light blue and green, which is more and more of this Vancouver crude heading towards Northeast and Southeast Asia. But also on this right-hand side chart, we can see actually since the latter part of August, we've actually not seen any cargo head from Vancouver to Asia via STS. It's all been direct shipments on Aframaxes. Staying with the theme of freight, let's move on to what's happening with VLCCs. Now, one of the main routes for global freight, for global oil tankers, is the ballast route from Asia to the Middle East. It's one of the busiest routes with the largest tanker class, and is a key driver of global freight rates. What we see in our latest data actually is a lot more tankers are ballasting from Asia to the Middle East. We can see almost 200 vessels that have ballasted from Asia into the Middle East. And that is likely to weigh upon availability and really weigh upon VLCC freight rates from the Middle East. Now, more and more of these vessels are ballasting back as a result of more cargo having headed towards Asia in August. And what that means going forward is that VLCC rates are under pressure, especially given the latest news that we're not expecting any extra supply or any extra exports from the Middle East, given the delay to December. One other factor to consider, though, is that if given what's happened with the Brent Dubai spread, if that continues, we could also see some VLCCs move away from the Middle East Gulf and actually head towards the Atlantic basin, where there may be some opportunities potentially to bring Atlantic basin crude to Asia. Now let's move on to looking at what's happening with CPP and specifically what's happening with diesel. And here what we can see is increasingly diesel heading from the Middle East and Asia into Europe, and quite high volumes. We can see the share of Middle East diesel and Asia diesel heading into Europe hitting very high levels, especially in August, as you can see with the red and green lines on this left-hand side chart. That's somewhat facilitated by the start of new refineries or newer refineries in the region. So on the right-hand side chart, we've got exports from the likes of Jazan in Saudi Arabia, Duqm in Oman, and Al Zour in Kuwait. And we can see more and more that these occupy a greater share of Middle East CPP exports. Finally, I want to talk about how these exports are actually getting towards Europe. And what we've seen in recent weeks is incredible increase in the amount of diesel heading to Europe, loaded on VLCCs and Suezmaxes. We've actually seen a 250,000 barrel a day increase in Middle East loadings. And we can see that most clearly on this left-hand side chart with this large shift upwards for the amount of Middle East diesel loaded onto these types of tankers. Normally, what's often the case is that these Middle East diesel cargoes are loaded on LR2s, sometimes Suezmaxes, but now we see a much larger shift towards these larger vessel classes. Now, since this trend has happened, it's interesting to know what's happening with the vessels once they've loaded their clean cargo. And here we can actually see a breakdown of what's happening by vessel class, at least for the most recent data. And two main themes emerge on the basis of looking at it for VLCCs versus Suezmaxes. So for Suezmaxes, we can actually see some of the vessels that had initially gone to loading diesel, they've switched back to dirty. Some are likely to switch back to dirty, and a small fraction still remain in CPP trade. However, for VLCCs, there's a little bit of a difference where we see a little bit more likelihood of these tankers remaining as clean product carriers, and also in some cases being converted to almost a floating storage vessel where cargoes can be discharged via STS onto smaller tankers and then delivered to buyers inland. So with that, I'd like to close our session for today. Thank you for joining Vortexa MENA Energy Insights, and look forward to seeing you on the next edition.